Insurtechs are going to be taking over everything. Independent agents aren't going to be able to survive all this. The day of the independent insurance agent is over. Welcome back, Better Agents. In this video, we're going to be talking about how independent agents can beat their direct-to-consumer Insurtech rivals. Now, before we jump into the video, make sure you're registered for Agency Success Live. It's a live show with a live audience that we're going to be hosting here on the Better Agency YouTube channel starting March 16th. It's a Wednesday, and every Wednesday thereafter. Make sure you're registered by clicking on the link directly in the description below. We're going to be talking about issues, we're going to be answering questions, we're going to be talking through the things that matter most to independent agents. And if you don't want to join us on the live show and you just want to watch on YouTube, you can catch us on the live stream and the replay every Wednesday starting March 16th. Direct-to-consumer or DTC insurance brands have been popping up all over the place, and usually the positioning of these companies has always been that they are going to replace agents. In fact, the CEO of one of the major, most popular DTC insurance companies said this.
Hence my prediction. The next insurance leaders will use bots, not brokers, and AI, not actuaries. So as big as the transformations are today, I really think you ain't seen nothing yet.
Now, Lord knows I'm no stranger to a provocative opinion, but this one might just take the cake. And hey, I'm not an expert when it comes to the stock market, and the stock market price isn't necessarily correlated to your company's success, but I'm guessing that if you were going to try to replace brokers and use technology as a means to distribute insurance, I'm guessing that you don't really want to go south on those charts. Now, this video isn't just about Lemonade, it's about the entire direct-to-consumer model. Now, whether independent agents want to admit this or not, there seems to be a lot of anxiety or even fear around direct-to-consumer companies jumping into the insurance market and taking their customers. They see the multi-million-dollar budgets, they see the fancy websites, the slick UI, and the ability to get a quote in under 3.2 seconds, and understandably so, it makes them a little bit nervous.
Little pigs, let me come in. Not by the hair on your chinny chin chin. Here's
Insurtech. Now, before we cast any stones of judgment or form any concrete opinions, I think it's critical that we go to what the data says when it comes to these direct-to-consumer brands. And that's exactly what I did. I pulled up the William Blair Insurance Distribution Economics and Valuations Report. I don't know about you, but that's what I spend my time reading on a Saturday morning. Now, the one thing I really appreciated about this 23-page report is they give you the TLDR, too long, didn't read executive summary right up front, and they hit it off with a banger. Brokers own the customer. You can put a period, exclamation point, and just say, we are done here. That's all we need to know. Brokers have traditionally owned the customer, and because they've owned the customer, they have much more success retaining the customer. Not just retaining the customer, but selling the customer more of the products and services that that customer needs. And this is something that's really been missing with a lot of these single point, just monoline or just maybe dual line insurance carriers that you can offer online. They don't do a good enough job of owning the customer. They have owned the experience, the shopping experience. They've made it really, really easy, but they haven't done a good enough job of owning the customer from start to finish throughout the entire customer lifecycle. The typical insurance persistence across personal and commercial lines is 5 to 8 years, with a decade-long relationship relatively common. Now, I'm doing just a little bit of foreshadowing here in the video, but you're starting to see my point of view and how I believe independent agents are going to beat their DTC Insurtech rivals, and it has to do primarily with owning the relationship and by being profitable over time. Now, the report has a lot more data when it comes to the profitability of independent agents and brokers when it says that both models have high margins on recurring revenue, but the more mature brokers show better combined margins because of a higher concentration of recurring business. Emerging distributors are mainly composed of new business, and therefore on the surface, they appear to have low overall margins. Now, I went to public school in California, and I'm not particularly well read.
U-C-H?
But this is what the data is saying to me. It's saying that Insurtech companies do a great job of client acquisition. They get people in the door with fast, easy quoting options. People sign up, but where they really struggle and what's hurting them is the fact that they're not profitable. They can't retain the business because it goes back to the very first statement in the very first page. Brokers have traditionally owned that relationship. They do a much better job of retaining business. Now, the report goes on to say that brokers generate significant value and have been good long-term investments. Inherent tenets are owning the customer, producing a long tail of recurring revenue, and generating high levels of free cash flow. The report further goes on to say that the biggest driver of a distributor's success is the long-term tail or recurring nature of the business. While a broker is a long way from a software company, the tail of the business is relatively similar. Once a client is on board, the typical retention averages from 5 to 10 years for most clients. Now, the William Blair report is an excellent report. I highly recommend you pick up a copy of it. I would distribute it to you, but I'm not sure if that's entirely legal. Now, here's where the rubber meets the road and where I think independent agents need to be a little bit more honest with themselves. I think over time, there's going to be a growing number of people who are going to want options like this. The number of people that want direct-to-consumer options and the optionality and the convenience of it, that number isn't going down. That number is only going to increase. There are going to be more people who want that. As the next generation of buyers come into the marketplace, you're going to see more and more of that. People are going to want more and more control over the buying process. But when I think about the direct-to-consumer model for insurance, I think about other industries where there's a lot of similarities. And one example that I always look at is a company like LegalZoom. I'm not sure if you've ever started a business on LegalZoom, got an S Corp, or done anything like an LLC, but LegalZoom has the perfect experience, in my opinion. You can go through the entire process, you can see how everything works, you can form your LLC, but one thing that they do at the very end is to give you the option to have a professional look at it. Have somebody else go through this and make sure you didn't make any mistakes. Now, I'm not a lawyer. I've never done anything, but I've started my fair share of companies, and I think I know a little bit about what I'm doing when it comes to starting an S Corp or forming a state entity. But one thing I always opt for is I always want somebody to go through there and make sure that I didn't do anything stupid that's going to affect me when it comes to taxes or legality. I want to make sure I've done this correct. And this is the exact same way that I think about insurance. I think what you're going to start to see over time, and one thing that we're working towards here at our company, is how do we make this process one that's convenient for all parties involved but still prioritizes the professional. We are going to attract people into our agency that want the convenience, they want the simplicity, they want the ease of doing business, but at the end of the day, they also want to make sure they're not doing anything really, really dumb. So what are the things that independent agents need to put a focus on if they want to ensure that they not only survive against these direct-to-consumer Insurtech companies, but they win and they dominate? The first thing they need to do is they need to put a stronger emphasis on their front-end marketing. If we believe the data is true that independent agents are winning because of their long-term profitability and retaining the customer, then the first thing you need to do is you need to get more customers. Don't be afraid to spend money. This is a mindset issue that I see a lot of independent agents have. They'll go out and they'll think about, well, it cost me $50 to get a lead, $100 to get a lead. It cost me $600 to write a customer. That shouldn't matter. When you're thinking about the long term and the fact that you're going to retain this customer for 3, 5, 10 years, you need to look at the long-term value of the customer. Essentially, how much commission is that customer bringing in year 1, year 2, year 3? Take the average commission and multiply that by the average amount of time people stay with your agency. If you find that your lifetime value is $3,000, $5,000, then you shouldn't have to worry at all if it costs you $500, $600, $1,000 to get a customer. If it's 5 times greater than what it is to get the customer, then put more emphasis on it. Put more attention towards getting the customers on the book of business, because you're going to survive, you're going to win, you're going to dominate when you retain the customer for 3, 5, 10 or longer years. So don't be afraid to make that happen and put more money and more emphasis, more attention in getting the customers in the door. The second point of emphasis for independent agents is to stop being transactional. The reason why these Insurtech companies are winning on new business is the exact same reason why they're losing over the long run. They only think about the transaction. They're only focused on acquisition. If that's all you focus on, you are going to lose. Now, the third point of emphasis is one that I'm really passionate about, and that's that agents need to start adopting technology. And here's why I think agents are going to win in the long run. Because while Insurtech companies have made it their position to replace agents with this technology and this ability to use AI and machine learning and all the fancy buzzwords and jargon, what you're starting to see happen more and more is more and more companies jumping into the space to help agents by giving them the technology, the tools, the things that they they're gonna need in order to go fight the battle. This is gonna be a gap and a margin that is going to shrink over time. And we already know based on the data that independent agents control the relationship, and when they control the relationship, they have all the leverage. So when you have technology to feed that and to equip you, you're going to be on the same equal playing field, and then you can utilize and deploy all the strengths that you have as an educator, as an advocate, as a teacher, as a protector, as a guardian, all these things that make up what an independent agent really is. At the end of the day, you're gonna be able to use technology and technology sources and resources to help push that message out. So while they're relying on technology that says we're going to replace the agent and their whole calling card is their tech, you're starting to see a lot more tech come into the space that's going to equip agents. And my advice, my strong suggestion is that if you're an independent agent, you start to look at these tools that are gonna help you be more sales driven. They're gonna help you increase and improve the customer experience. You need to take advantage of these things if you want to survive and thrive against your DTC rivals. The next point of emphasis is you need to invest in your onboarding and renewal process. And this is where technology can come into play. You can use CRMs, you can use a sales-driven AMS, you can use technology to really manage this experience from onboarding to renewal. And my advice tactically and strategically is to start communicating with clients long before the renewal happens. I would say about 9 months into the personal lines account, you need to start thinking about renewals and retention and really forming that relationship. There's all kinds of little things that you can do in automation, and all those things are gonna help do that heavy lifting for you. But I would start to put a heavy emphasis on your new business onboarding, getting people to be more familiar with your brand, getting them to wanna refer you out, getting them to wanna give you a Google review or to speak highly of you or become an advocate for your agency and the experience that you provide. And then you need to maintain that. Again, you don't want to ghost people. You don't want to talk to them in 2 years or 3 years. You need to talk to them in automation. This can do the heavy lifting for you. This is where adopting technology can really be to your benefit. But you want to start communicating with your customers long before the renewal date happens, maybe in the 8-month, 9-month period, and start to be somewhat consistent, but deliver value. Don't just ask them for the renewal. Don't just ask them to pay their bill again, but make sure you're solving problems for them. Again, display your importance and the value of them working with an independent agent. This is going to be how you improve your retention from 3 years to 5 years to 7 years or beyond, is by building that relationship and by putting a strong emphasis on those two aspects of it. You need processes in your agency that are clear, that are easy to understand and easy to deploy. You can't scale processes that don't exist. If you don't have processes in your agency, you're not going to have the infrastructure that you need to grow your agency. Your processes are your load-bearing walls, and if you don't have them in place, if they're not clear, if you can't articulate them with simplicity, if you can't deploy them or delegate them to people in your agency, you're never going to attract top talent. You're never going to retain top talent. And as a result, you're never going to attract and retain the customers that you want. This is all part of having the right experience. So make sure you have a clear process for onboarding, for renewals, for what happens in a claim, for what happens during service requests. You need to have all of this figured out. And again, technology can do the work for you. And there's a lot of players that are jumping into the market that are coming to the defense of independent agents. You need to figure out how you can get on board with these types of companies. Thank you so much for sticking to the end of this video. I really hope you enjoyed it. Do me a huge favor. Make sure you're subscribed to the channel, like this video, comment down below, let me know your thoughts, and make sure you're registered for Agency Success Live starting March 16th, Season 1, premiering exclusively here on the Better Agency YouTube channel. I'll see you again in the next video.